May profits be upon you. Welcome back. All right, this is the weekly Forex forecast, part two. All right, this is where I'm going to handle the Swiss franc and the Japanese yen because I couldn't finish in time to complete the video that I just put out prior to this. That was the weekly Forex forecast, part one, and that handled the U.S. dollar index, the euro, the pound, the Aussie dollar, the New Zealand dollar, and the CAD or the Canadian dollar. All right. So make sure you check that video out. All right. Before you go into next week. Okay. And check that out right after this video. I'm going to leave you a link at the bottom of this video or in the comment section. Check either one, but I'm going to leave you a link in there. Okay. Because you want to check that out. All right. Now, as far as the Swiss franc goes, let's look at the monthly, and you can see it's very obvious. It's very strong. This is the monthly time frame. It's been strong for months. Okay, and there's no reason to start thinking shorts. Yeah, we are. We just took a very nice high here. All right, we swept that for liquidity. You see the wick from that area as we retrace from that area, but that doesn't give you a good reason to take shorts from this point. Uh, there was a lot of liquidity, a lot of what do you call it? Fair value here, right? We don't have a fair value gap here, but I'm looking for price to retrace into this area, but not completely to this high on this candle. I'm looking for price to come down and then continue higher. Really, that's all there is to it. I'm expecting more bullishness to come. There's no reason to take shorts in this market. Let's look at the weekly, and you can see last week candle closed here. All right, it's closed inside the range of the previous candle. That makes it an inside bar, and you usually see inside bars when there's a change in direction. After a rally, you might see a pullback. All right, that's all there is to it. And it's an inside bar, but let me say this: it was a short range, truncated uh, week last week. All right, we didn't. We had a holiday on Friday, and I don't even count. It's a bank holiday on Friday. I don't even count those those the data, the wicks, the candles. I'm sorry for that day. Not me. I stopped counting at. I stopped looking at it on Thursday. All right, when Thursday's closed, and then I'll start looking at it again on Monday. All right, I don't even count those candles because it's there was no volume. People were on vacations and all kind of mess. So don't get thrown off by that. But what do we see here? I want you to see that there is a bullish fair value gap here on the weekly. This is a weekly fair value gap. Price can use that to come back to find support and then move higher. That's it. All right. And again, there's no reason to look for bearishness or look for shorts. All right. But I do want to make a notation here that there is, there is some, uh, a reason to think that if price comes in this area, we could. Matter of fact, let me thicken that up a little bit. There is a weekly fair value gap here that supports higher prices. That's all there is to it. All right. Now, let's take a look at the daily. All right. We're doing some professional top down analysis over here. All right. Inside of this weekly fair value gap are bullish fair value gaps from the daily right there. All right. This just shows you the structure that is in place to support higher prices. We can start turning around, finding support here and moving higher, or price could retrace even further down here and then continue higher. All right. This is, look at this area. Down close candles overtaken by a stronger impulsive move to the upside with a strong close. If price comes down here, this is going to be a high probability trade to the upside, period. All right. Uh, but this area here is consequential. Why? Because suppose, you know, we push up, because price doesn't just go up in one big impulsive move. It has to go high, higher, higher low, higher, higher low. This is the uptrend: higher high, higher low. That's how uptrends are formed. So there is room for a retracement. Is the retracement over? That's the question. I think there is some, what do you call it? A draw on liquidity, because this Friday candle, like I said, as discounted for me, is there's no wick. All right, that means it could be a draw to some people on a draw on liquidity, meaning down, and 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 price could take this low. Price could take that low from Thursday's low. That's 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 something to be careful of, to be wary of. If it takes this low here for liquidity, let me what am I going to put there? There you go. If price finds that for liquidity, we come back down here. There's the weekly fair value gap here, a daily fair value gap embedded inside of that. All right, nested within. That will give a very nice trade, a nice setup to take a high probability trade to the upside. So I'm looking for that. All right, I'm looking out for it. Not saying that that's what I'm expecting. I'm looking out for it because the likelihood is there that it could happen. All right, because we are in retrace mode. We just took out a very important swing high over here. Boom. Right. So a retracement is natural, and we see that retracement, and it's kind of listless. If you ask me, it's drifty, a little drifty. All right. So could it come lower? Look at this. This is when did this happen? On Thursday. When did it start to pick up? This is the recovery from Thursday. There was a NFP. We had a robust report for the US dollar. It strengthened, bringing the price for the Swiss franc, dragging its value down while it strengthened, but then it started to recover. All right. And what do we see in that drift down? Well, some hints. All right. Sorry. What I want to show you is there's a 4-hour fair value gap here, right? And what does that mean? Well, price pushed down and then recovered. All right. And if we close past that 4-hour fair value gap, if we go past it, we can invert it. This becomes an inverted fair value gap, and we have support for higher prices. I am looking for that, looking out for it. Okay. All right. These candles here are Friday's candles. Again, they're kind of listless. They don't mean much. All right. But come Monday, where there's no red folders, all right, I think that there is a chance that we may gap. I think there's a chance that we may see some misdirection from Monday. Sometimes you see that. It happens quite frequently, actually. So price could come down to this bullish fair value gap on the 4-hour. I said bullish with a capital B because price could find support here for higher prices. So we can find support below the Friday lows. We can find support above the Thursday high with this inverted fair value gap here. If it in fact inverts, all right, we push up, we come back to it. This will be a high probability trade. This is high probability. This is high probability. And again, if it does come back down here, you see this dotted line down here. All right, that is the weekly fair value gap. If we see the signature of price that says, hey, we're turning around here, where you see a low made, a lower high, a lower low to take liquidity, and then a higher high made, taking that breaking market structure to the upside, the pullback is where you have the highest probability trade. So I have three areas that I'm looking for that buy, that high probability trade. All right, I'm not looking for sells. No, I am not. You want to take sells, you can scalp it down. All right, but I won't. All right, now let's move on to the next one, which is, I'm taking my time with it, so excuse me, the Japanese yen. If we go to the monthly, what does it look like on a monthly? Look at this. All right. You see how this move down took out this low, right? Let me use some drawing tools. We took out the low for the sell side liquidity, and then we see 1, 2, 3, 4 to break that high, to break this high. Is this the CISD? Is that the change in the state of delivery? It very well could be, because you see how price came or closed very strong. We ran these highs, all right, and closed above it very strong. All right. The pullback never closed below that high. All right. No candle body closed below the high. We stabbed. You see the respect candles showing up. There's respect wicks showing up. That's the kind of reaction you want to see. All right. If you think that price is going to continue higher, let's go to the weekly, and you see last week's candle, small range, insignificant kind of inside bar. All right. And what did I tell you about inside bars? A lot of times you see that when a direction is changing. And what direction would be changing? We were bearish. Could we become bullish now? Interesting. Yes, it is. All right. So here's that CISD area I was talking about earlier. We haven't gone past, we've been trading very comfortably past that high on the weekly. Can you see it? Yes, you can. I know you can. Stop playing. All right. So if we go to the daily, again, we're over here above that high, above that CISD. All right. You can see how price stabbed into that CISD just to sweep the liquidity here. And then we have the move up. And look at this move. I want you to pay attention to this. This is a bearish fair value gap, right? Price was supposed to use it for lower prices. What did we do? We ran it, closed above it. What does that mean? We inverted that that fair value gap. What does that mean? Instead of it being resistance here for price to use to go lower, it becomes support once we trade past it. We see this wick of respect here, and we see price move higher. Okay, so we got an inverted fair value gap. Big deal. We can still continue down lower, can't we? Yeah, we could. However, what happens is we didn't take these highs, and there's these highs here, descending highs, which are a strong draw on liquidity to bring prices higher. All right. And we had this impulsive move, and then we had the correction that went all the way up, almost completed at 100%. All right. I am looking for this retracement to end here. All right. With this inside bar, which was Friday's candle. Again, discounted. All right. We are bumping the inverted fair value gap, and you see the follow through. I'm looking for Monday to quite possibly turn into some misdirection. Maybe we take this low, maybe we take that low, the low of Friday, because again, there's hardly any wick, very small wick. I'm thinking that it's going to draw some liquidity down for misdirection, and then we see some movement to the upside come Tuesday and the rest of the week. All right. I think this inverted fair value gap holds. All right. Now, there is another inverted fair value gap that we have to trade through. This is the one that's going to tell us if we're on the right track or not. If price continues higher past it, if price crashes through it on Monday or Tuesday, if we get a close above that inverted fair value gap and we create a bullish fair value gap along the way, this is going higher. So we look for that as confirmation. You got it? If it comes down here, that is not confirmation of the move. What would be confirmation is if we see price turning around on the lower time frames once it reaches this POI. We're looking for a low, a lower high, a lower low, and then a higher high. That is our confirmation. When price pulls back, that is a high probability trade to the upside. That is a signature that we'll be looking for right here on the lower time frames. All right. But if we don't necessarily have to come down here. We can start to pull up from here if this inverted fair value gap fails. You understand? So I am bullish. We also have the Bank of Japan, and analysts are saying that they're looking to raise the interest rate on their currency. That would add strength to that argument, and that would add strength to the currency to bring it up higher. Okay, so those are things we have to consider. This is the Thursday response to the NFP, right? Japan is sending negotiators over to the U.S. for the tariffs situation, which has to be resolved before July 9th. All right, when that kicks in, oh boy, it's probably going to weaken the U.S. dollar and strengthen the yen. So there's some factors, some fundamentals that may strengthen the argument that we might be seeing some upside in the Japanese yen against the U.S. dollar. All right, so those are the things to consider. If this inverted fair value gap gets traded through and we close below it, then we know we're probably going to be heading down towards these relative equal lows, towards those lows. I hope this helps. All right. Do not forget to check out the weekly Forex forecast part 1. All right. I'll leave a link for you, and do not miss the weekly market forecast, which I'm about to put out right behind this video. All right. And that's the one that I'll be going over: the S&P, the NASDAQ, the Dow, gold, and oil. Okay. I'll see you in the next video, and thank you for watching. May profits be upon you.